What is restrictive US monetary policy? Well, it happened before in year 2000, it happened before in 2008, and it's happening right now for 2024. As a matter of fact, right, this thing happened way before 2002. So I'll tell you more in details, but most important thing, we have book profit for Hang Seng and Dow Jones. It's time to look at the other side. Right, without further ado, let's go into the video. Now, first of all, disclaimer applies as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, right, yesterday we told you about we bought Hang Seng right here itself. Let me bring my mouse in. Okay, here we go. We bought the Hang Seng somewhere around here. Okay, and we climbed because our big boys indicator, the KSI, was green on the intraday. The momentum was there, so that's why we went long, and the market gave us the first ride. Once it hit the pivot 1, which is a common resistance point, you can see the market actually hangs around here. But once it stabilized and went above the line, you can see that boys are buying, momentum is still good, the upside continue, and we hold on to the position for more profits. All right, so that is one of our account student profited on the market. Okay, and at the same time, we also book our profit on the Dow Jones. Now, Dow Jones have been sideways, but once again, same thing, it break the resistance, which is the pivot 1, and the boys are all buying. The momentum is good, so the upside basically brought it up all the way, and we book some profit somewhere around here. You can see on the statement side. So all this tells you that we are really serious about trading and we follow our rules to make money from the market. All right, I'll tell you more in details about this chart towards the end. Now let's look at the Federal Reserve first. Okay, Federal Reserve, every time when they hike interest rate, okay, this is something that you must understand. Every time when the Federal Reserve hike interest rates, right, okay, at a peak itself, when they start to cut interest rate, you notice that that is where the recession kicks in. Okay, got the idea now? Okay, let's try again. So Fed increase interest rates, okay, hit a peak. The moment they cut, you notice that that's usually where the recession always started, okay? So if you look at it right now, even recently, right here, where they raise interest rates, okay, it peaked. And the moment the Federal Reserve cut interest rate, you notice that that's where the recession kicks in. So with what is happening right now, we know that the Fed is going to cut interest rate this year, right? So based on what we are seeing, every time when the Federal Reserve cut interest rate, it will be because there is a possibility of a recession coming in. Oh, that's one thing that you must understand. But is it every time? Not really. If you look at it here, right, there are times whereby there were no recession when the Federal Reserve increased interest rates, and then after they cut interest rate, there were no recession. Okay, there's one came in later in 1969. So the thing is this, people are now betting that these are what we call the soft landing. So everyone is expecting that there will be no recession. In fact, it will happen exactly what happened in 1994, happened in 1985. So they think that even though the interest rate will come down, there will be no recession. But the thing is this, for us, we look at the real GDP yearly growth, you can see that the year-on-year change in real GDP has really sunk quite a fair bit. It was expecting about 10%, and now it has even gone all the way down to nearly the 0 mark. And of course, we all know that once it hits 0 mark, we have the issue. So restrictive US monetary policy, right, from gains of trades, right, means it's the 10-year Treasury yields minus 3-month Treasury yields. We can see that every time when you go past the 0 marker itself, right, that is where things happen. So what is restrictive US monetary policy? Let's bring to you. Now, restrictive monetary policy refers to the monetary policy of slowing the money supply growth to decelerate the economy. So in short itself, when you have restrictive movement, they are telling you that the banks, the central banks wants to really reduce the money supply. So when you do that itself, right, its objective is to reduce inflation, what we know, but of course that will also contract the economy. That's why it's called a tight monetary policy. So what we're seeing right now is that we are definitely going to expect the Fed Reserve to do this, okay? And when you do that itself, right, what will happen then? Let's take a look. Back in March 2000, okay, whereby you can see, right, the restrictive measurement came in, okay, and that was the top of the market because why? Back then itself, March, the NASDAQ popped, all right? Basically, it's how the NASDAQ was shooting up very fast from 2,500 shooting all the way to nearly 5,000. And that was a time whereby everybody's going crazy, the dot-com bubble. And then after that, the same time when the Federal Reserve decided to pick it, right, look at the market really collapsed. So you look at it again, it happened again in 2006, February, whereby same thing again, the restrictive measurement came in, all right, and that was the February 2006. And of course, we all know that back then the market also came off, the housing bubble. The housing bubble came in, peaked at the same time around February 2006 to 2008. So we all know that when you do restrictive measurement, it does actually cause a post effect to the market. And right now, you can see the market is now somewhere near the same level. Let's take a look again. Okay, hold on. Okay, there's some PowerPoint issue. Oops, sorry. We're now at this point whereby likelihood there will be a pullback soon. So if that can happen, something big probably is actually coming on board. And that's the reason why you can see last few videos I tell you guys that the boys actually, the insiders actually taking profit or taking their running away from their market right now, while retailers are still jumping in without knowing what's the reason. So let's look at the all-time high strategy for you to take note of this. Okay, how can you make some money out of that? Okay, so we have the all-time high traded on the Dow Jones about 4 days ago. Okay, so by right, if the market can't go down, all right, it will try to go for all-time high again. It's possible, but to me itself, I just feel that 38,100 plus 100, and I think the high is about 150 plus, I think, is the peak for me. All right, to me, that is the peak for the Dow Jones. And based on the usual rule, after the market hit an all-time high, usually it will pull back by at least 5%. But in this case, in March during the December-January period, it didn't really happen. So we suspect that at this time around, it may happen soon. So if the market do come down, the Dow will have to come down to about 36,250 area. Now, of course, there's no good reason for the market to come down right now because everybody is so bullish, everyone is buying. But just again, it's not technical. We just need to be very, very careful. And of course, if you put into the common conventional charting, you can see that the RSI is coming down right now while the market is actually going up. Okay. Now, by right itself, when the market is going up, the RSI follows, right? So this is called momentum. And its momentum means that the market is following through. Hence, therefore, there's no reason for you to panic. But now when the market is still trying to go up while the RSI is coming down, there's two prongs to it. One, that means that the next wave can be all the way to 39,000 if the market really want to go for that. But at the same time, if the market breaks, then this will break a major trend because you can see this trend came from October 2023. And we do see that when combined with the market trading below the moving average, there could be some selling. So to me, it's all right. It's just a matter of time. And the market now is seemingly having some little issue crossing the previous high. The previous high is here, okay? And the market tried, which it did, but now seemingly is just holding at the previous high level. Now, of course, this could be a strong support, but at the same time, this could actually tell you that if the market failed to hold, then selling is kind of expected. So again, I'll put it for you. My target upside itself could be as high as 39,000. The downside itself could be as low as 36,250. So guys, watch out for these two set of numbers, yeah? And of course, you put into my TWB indicator, that will be even better. Now, take a look here itself. My big boys indicator shows that there's no boys selling here. The boys are still buying. The boys are still buying. So that's why the market can't come down. And the momentum is definitely very buoyant right now. So there's also no reason for selling. But the only thing, the mathematics doesn't look good. The mathematics tells me that, right, the market has been dragging its feet up. And this basically means that there's some exhaustion, there's some tightness, there's some weakness here itself. So with the weakness there, I think for buyers, you need to take profit. And for us itself, we buy the last few days and we think that the market is a bit tip at the high level right now. Hence, therefore, we decided to take profit. So for you guys, let me know in the comment box what you think of the market. Until then, again, this is Cal signing off. Take care, like and subscribe and share my video. Bye-bye.